levels. But suffice it to say, this is a very high stakes game where some of the biggest institutions on the planet got caught very much offside and were, you know, actually looking at what could ultimately be a existential threat to their survival. And so they did an awful lot to slow down the rise. But here we are again, back up over $1 plus and back up over 50. And maybe it's because silver is now a critical mineral. We've been talking about that for a long time now. Now it's official. Maybe it's the realization that it's irreplaceable, that it's the most conductive element known to science, the lifeblood of energy and data and power itself. Who knows? But the bottom line is that with the U.S. government calling it a strategic mineral, they've put a floor under the price, and they will, I think, start to purchase it. At the same time, you have the Chinese Ministry of Commerce.
The recent drop in gold and silver prices has created controversy in finance. The temporary regression of both metals after months of advances has raised suspicions that it was a staged pause, one that gives sovereign funds, central banks, and huge institutions one last chance to accumulate physical supply. When an asset class rises 60% to 70% in a year, a cooling off is expected. However, global capital behaves differently now. The calm absorption of physical metal at these prices suggests that deep-pocketed entities profited from retail sentiment's volatility. We found that this accumulation phase matches official sector data. Central banks are buying gold at record rates. In the US and China, government agencies have classified silver as a critical or strategic mineral. This cannot be overstated. It marks a shift from silver as an industrial metal to a key component of technological sovereignty and national security. So, the pullback wasn't about price. Access was problem. Silver has definitely breached $50, proving the correction worked. The actual supply is shrinking, premiums are high, and many national mints are struggling to meet demand. For attentive readers, volatility is not the story. The topic is power consolidation over finite, irreplaceable resources. As the market cap remains a pinhead, Andy Schectman accurately predicts that large-scale capital entering the silver market might spark an explosive rise. In the video of the day, Andy Schectman explains why this new silver phase is different from others. Please listen as we dissect Andy's latest study on silver's rapid transformation from an industrial commodity to a strategic reserve metal. If you appreciate grounded, fact-based opinions, please like, subscribe, and share this video with those interested in the historical evolution of the precious metals market. We appreciate your help and hope you like the film.
Important to remember that even with the sharp correction we saw, silver is still up between 65 and 70% this year. And I mean, I don't know how many assets rank higher than that. But when you have any asset that appreciates in a parabolic manner 40% in 2 months, a correction is inevitable. This is what overbought is. And, you know, it shouldn't come as a surprise to people. And I think that certainly is something that's hard to rationalize for us gold and silver bugs, because we've waited so long and feel that, you know, that the market should have done this a long time ago, gotten to these levels. But suffice it to say, this is a very high stakes game where some of the biggest institutions on the planet got caught very much offside and were, you know, actually looking at what could ultimately be a existential threat to their survival. And so they did an awful lot to slow down the rise. But here we are again, back up over $1 plus and back up over 50. And maybe it's because silver is now a critical mineral. We've been talking about that for a long time now. Now it's official. Maybe it's the realization that it's irreplaceable, that it's the most conductive element known to science, the lifeblood of energy and data and power itself. Who knows? But the bottom line is that with the U.S. government calling it a strategic mineral, they've put a floor under the price, and they will, I think, start to purchase it. At the same time, you have the Chinese Ministry of Commerce. Their name is, the acronym is MOFCOM, Chinese Ministry of Commerce, has issued new rules regarding the state traded exports of a few different commodities, including silver. So they are doing the same thing. They aim to step up, if you will, the protection of resources, and that means curtailing exports in 2026. And look, when you realize that the largest refiner of silver in the world, China, is restricting exports and has announced starting in 2026, all silver exports will require individual government licenses from Beijing. Um, to me, this move classifies silver as a resource of national interest, not just to the United States, but signaling a strategic shift towards state managed supply, including places like China. It's a big deal. It's a very, very big deal. And I think the bottom line is silver is being redefined from an industrial metal into a geopolitical resource or into a strategic element, not just in the United States, but all over the place. The more major dealers or those smaller dealers would consolidate, in my opinion, because the cost of maintaining an inventory is becoming exponentially more expensive. And with that, you have insurance and shipping and all of the things involved. It's expensive. It's much more expensive than it was to hedge a position at higher levels. Takes away some of that risk. But most of the smaller coin companies or local coin shops don't hedge their exposure. So it's a big deal. You have a large inventory of silver, and the volatility that we've seen where it can fall 15-20% in a short period of time. That's enough to really scare a lot of these coin shops out of business. I think it's an interesting thought experiment, but my guess is the higher the price of metals go. I mean, look at gold. A tube of gold eagles now is well north of $80,000. And so how much gold can you really have as a local coin shop, not only from a standpoint of maintaining an inventory, you better have millions of dollars to use, but insurance and shipping and all of that stuff, it's becoming a lot harder. When gold was $1,000 an ounce, I remember my father-in-law sending me a text message, "Congratulations, so gold's finally over $1,000." Well, back then, it wasn't too long ago. A tube of gold eagles is just over 20,000. It's gone up 4 times, and that's just one tube. So you want to have what, 500 ounces of gold in stock as a local coin shop? I mean, how much money do you have? And then you add silver and platinum and the cost of insurance and whatnot. It's a tough deal, I think. The higher it goes, the fewer the choices. If I had to guess, you'll find. I mean, we probably do as much shipping as anyone in the United States on a, that's not a fair statement. Our shipping with Federal Express is as robust as it can be without being someone like Amazon. And so we get all of the discounts that you would get and have all of the insurance that you could get. And, we still don't put more than $150,000 of product in a particular package. You try to ship it by registered mail, the most they'll give you is 50,000. So if you can only do 50,000 by registered mail, you're not even doing a tube of gold eagles. And, that's challenging. The costs are getting more expensive. You look at companies like FedEx, their costs are going up. It's tough. So prices will go up. Insurance will go up. It's real for sure. So again, this further would, I think, push towards consolidation into the larger companies who have the wherewithal to do it. That's not great for the consumer, but it's just the reality of the cost of doing business, and it's increasing dramatically. If it continues down this path, yeah, it would be very interesting if you saw triple-digit silver, where you're talking $50,000 for a monster box. Yeah, it's getting tough. But triple digit silver really isn't that crazy anymore. Keith Neumeyer was the first one to talk about it.
Yeah.
And when you look at the fundamentals behind it, it's not that outlandish to say that.
The essence of this transition is encapsulated by Andy's assertion regarding the redefining of silver as a geopolitical resource. China, which is already the world's largest silver refiner, is signaling that domestic requirements now surpass commercial opportunities by announcing export restrictions that will commence in 2026. Silver has been included in the United States Critical Minerals List, which has effectively established a price floor for the metal and has positioned it for direct strategic accumulation. The consequences are significant. At the same time that industrial consumption accelerates, these actions reduce global liquidity in the silver market and tighten supply channels. Silver ceases to function as a conventional commodity in this setting. It becomes a controlled asset, and the market's paper claims on silver begin to lose credibility in comparison to physical reality. As Andy elucidates, accessibility is the subsequent obstacle. For smaller dealers and local coin stores, the cost of inventory maintenance will become prohibitive if silver continues to appreciate toward triple digits, as analysts such as Keith Neumeyer and Michael Oliver speculate. The industry will be consolidated toward major distributors due to the increasing costs of insurance and logistics, which will limit the options available to average investors to acquire physical metal. Nevertheless, opportunities persist in the face of these transformations. Andy identifies scrap silver, which is pre-965 U.S. coins, as one of the most practical and undervalued forms of silver ownership. It is widely recognized, divisible, and frequently trades at or near spot, providing investors with an affordable entry point without the exorbitant premiums that are currently associated with silver eagles and other popular bullion products.
Not sexy. It's not. It's dimes, quarters, and half dollars minted prior to 65. But where I say it's the best value, if you can do anything at or near spot, which junk silver is, or maybe a little over, but not much, you're buying something that is the best value with no opportunity costs, with no added premium attached. And you put that in reference or measure it against where it's been in the past. During the pandemic, because of its utility and its divisibility, the premiums were second only to American Eagles. And the U.S. Mint has been the model of inefficiency for a long time. And, I asked people to listen to Vic Swear's interview with Jack, what's Jack's last name? I forgot Jack's last name. It'll come to me in a moment. But Jack Sermon developed the Silver Eagle program at the U.S. Mint, and Bix did a 3-part interview with him a couple of years ago. I remember almost falling off my chair where he said he was approached by, at the time, his boss, which would have been the Secretary of Treasury, Janet Yellen, who told him to make as few Silver Eagles as possible without creating a global backlash. I mean, he actually said that. That the primary distributors came to him with far more demand than they could fill. Like they wanted another 36 million and they gave him 12. And he said it really bothered him. So, there's a fine line between conspiracy and reality with the U.S. Mint. I would prefer Silver Eagles all day long, with the, many of these states looking at silver coins made in the U.S. as legal tender. But the premiums on Silver Eagles, on Gold Buffaloes, are crazy right now. And moving in that direction again. The fact that junk silver hasn't followed it the way that it did during the pandemic is testament to the fact that things aren't breaking apart for everyone to notice. This is just those who follow the U.S. Mint and their lack of capacity. But if I were going to say what is normally, I would say bars. But due to the threats all along this year of tariffs, the bar industry, or the products that are associated with silver bars, they're coming largely from Switzerland, and with Pam Swiss and Valcambi and others, they weren't imported very much, and so the premiums are higher on them than I like. Maybe 1 ounce rounds, those come from domestic refiners here, would be the next best. Or maybe even there are some coins like the 2026 silver kangaroo that we have in stock, or some of the other coins that are not American Eagles but are of the other six major mints, the Krugerrands, the Britannias, the Philharmonics. They're right there, and because the bar market is inflated, I skip it. So it would either be junk silver, 1 ounce rounds, or coins from probably not even the maple leaf, which is getting inflated again. It would be South Africa, Australia, UK. To me, would probably be the three that would stick out as being a good value right now. Um, it because of this, and because the move to classify silver as a resource of national interest, that's China. Um, and then you add the U.S. putting it on the critical mineral list, which means they too can curtail exports. The president can do it without congressional order. And then you look at the essential role of silver in solar panels, electric vehicles, semiconductors, defense, you name it. I think what it really does is it shows that both countries are viewing silver as a strategic asset. It's not a commodity anymore. And, um, I think you're looking at a potential supply crisis and rising strategic value. What starts out as a trickle turns into much more than that. And, the people watching this show and listening to others in the industry who talk about this are way ahead of the curve and think, well, geez, everyone knows this. But walk outside your bubble and talk to anyone who's well read, reading the wrong stuff, mind you, they won't have any idea about any of this. And so we're a ways away from that moment where it turns into a stampede. But it will curtail, I believe, it will curtail supply. And in a market like silver that is so massively rehypothecated at the upper levels, meaning the same contract is sold over and over and over and over again, creating a real problem.
The observations of Andy serve as an indicator of a more profound structural transformation in the global monetary system. For decades, Western markets regarded silver as a byproduct of industrial expansion, with paper contracts transacting at a rate that was hundreds of times greater than the available physical supply. However, that era is now coming to a close as China, the United States, and other nations have classified it as a national resource. The genuine metric of value is now physical availability rather than speculative leverage. This dynamic is consistent with the experience of gold markets, where the confidence in fiat-backed financial instruments has been progressively eroded by central bank accumulation and geopolitical fragmentation. The current distinction is that silver's function is not limited to wealth preservation. It is an essential component of semiconductors, energy infrastructure, solar, and EV production. Silver is situated at the intersection of finance and technology, serving as a link between the traditional monetary system and the burgeoning industrial landscape. Due to this convergence, it is entitled to a dual premium. One serves as a monetary hedge, while the other serves as a strategic input in the energy transition. Price acceleration is not only feasible, but also inevitable when both forces are in harmony. Simultaneously, the rehypothecation issue, which involves the sale of the same silver on multiple occasions through futures contracts, continues to be an implicit vulnerability in global markets. The mismatch between physical and synthetic supply could result in substantial dislocations as governments prioritize domestic access and restrict exports. Investors who possess physical bullion rather than paper exposure will likely be the primary beneficiaries when that divergence emerges. The message is unambiguous for individual investors. The consolidation of silver dealers, the tightening of global supply chains, and the reclassification of silver as a strategic asset all suggest a future in which the opportunity is defined by accessibility rather than affordability. One of the few direct methods to participate in this transition is to own physical silver in any form. Those who act before the next wave of institutional accumulation are likely to benefit the most. If you found this analysis to be insightful, please ensure that you are subscribed to the channel and that you have enabled notifications in order to not miss the upcoming in-depth examination of the evolving dynamics of gold, silver, and the global monetary system. I appreciate your attention, and as always, I urge you to remain informed, prepared, and invested in the truth.